BD Prof, welcome to another breakdown of my backtesting results. This was EuroJPY. I was doing another backtest, but this time this was more of rule-based backtesting. That means anything that was not following the rules. Though I did took those trades, but we want to see what is now the probability of our rule-based strategy. Remember, in our first episode, I showed you that it is through backtesting that you are able to confidently encrypt some rules into your trading plan. So we were saying any trade that ends up playing without following our rules, or it breaks one of our rules, that trade automatically becomes low probability. So we are going to examine these trades because I've written the summary. We were able to take around how many trades were they? 11 trades. There were 11 trades, and the 11 trades we had high probability trades, which we call it rule-based, rule-based, and then we had low probability trades which did not follow rules. And when we say did not follow rules, we mean those which did not follow rules in one part. Remember, our trading plan is a step by step, so you are able to detect a low probability trade in every step that you are undertaking. Therefore, let's examine the trades together, and then we see the win rates and everything. Yes, so here with me are the results for the 11 trades. We did have 11 trades, and the first trade was a rule-based trading. Did not align with our higher time expectation, but we established that the price was bearish and it smashed. So this was the first one. It was rule-based, we smashed. The second one did not have a fair value gap on the context expansion. So this was a low probability trade, and you see this was on your context time frame. One thing was missing, and this was low probability, and we ended up being stopped. Rule-based could be able to identify the bias because of the opposing PV arrays, and this one smashed. Trade for rule-based smashed. Trade managed. When we say trade managed, we are saying those trades that the trade duration ended before the trade hitting our take profit. So we continued managing it until it smashed our take profit. So it was also rule-based. So it means that when you're trade managing a rule-based strategy, is high probability that it can go all the way to your take profit. So rule-based bias determined bullish, and then we were stopped. So this is the first one, that it was rule-based, but it was stopped. During entry, there was lack of clarity, therefore low probability, and this one ended up stopping you. You see, such small things, these are called price manipulations. When you are trying to execute, something just happens within for example, within this one, there was no clarity in your entry. Nothing, the candles were expanding haphazardly. So, and you ended up being stopped out. At entry, we did not get a nice engulfing candle. Now, this is another thing I've noticed on so many trades. Everything else has played out except at the point. You find that everything else has played out in your trading plan, and then when it comes to the point of execution, it gives you an engulfing candle, but it's not really an engulfing candle because the previous candle wicked it higher. It wicked higher. So this other one closed slightly below but above our line, our context line. So this one kind of gives you some confusion. So what is now happening here? Do I take this trade? Is it now a low probability? You don't know, and sometimes you end up risking on it. And you see in this one, entry did not get a nice engulfing candle, and it was low probability, and it ended up being stopped out. So even a little manipulation, you need to pick it up from your from your trading experience. Rule-based stopped. Rule-based smashed. No fair value gap during entry. Low probability stopped. So as you come to our chart now, maybe I zoom out so that we can see. Are we able to see one by one? Each trade one by one. Yeah, I think this was the first one. We were taking our entries on 3 minutes. Yes. So you see such a price action when you just hold on this trade and it went straight to your TP. This was high probability. When you examine this price leg, there was a fair value gap and everything played out so well. So rule-based trading normally delivers price so well. What happened to this? This one was stopped out. It was stopped out. Methods. Let's examine just a few before we establish now our win rate and we make our conclusions. And then I will tell you which pair and which pair you ought to choose when you are trading. So this one, you see, it was rule based and it smashed our take profit. And when you do your back testing, there are things I was telling one of my partner that there are things you will never discover unless you are on the chart. So you need to learn to spend your time on the chart because there are things that you will never see. During this time I was doing the back testing, I discovered so many things. There is this idea of the bias and how to find the bias. But the more I did the back testing, I noticed that the idea of the bias is not even an issue. It was not an issue. So you see such spikes that sometimes this one was because of the news. And now when you are back testing, you might not incorporate the data from the news. And also the important things like the time of the trade, because you are now just pressing a replay. So those are the realities that will not be captured during the back testing. But it can give you just a rough idea of your trading strategy and what you have worked on. Have you mastered to see those setups? And then now you do forward testing. Now there is back testing and there is forward testing. So you make sure also you apply forward testing. So finally, I want us to see our win rates. So let me just cap up this. So our general win rates, we had 11 trades, 5 won. This was 45% win rate. Then rule-based win rate, we had 7 trades that followed our rules. Out of these 7, 5 of them won, making our win rate to 71%. Then rule-less trades, those trades that did not follow any rules, they broke either one rule, something just happened. There were 4 trades. Out of the 4, 0 won. It was 0-1 win rate. So in short, what we are saying, we can come up with a clear conclusion that rule-based trading is higher probability. You better follow the rules. You better filter your trades based on the rules, based on your trading plan, based on your strategy, based on your risk averse, and based on your psychology, based on the time, based on the pair. So how do you choose a pair to trade? The best way to choose pairs to trade is doing a backtest. You learn a strategy, do a backtest on that pair, and when you see a good execution on that pair, then you can embrace that pair into your watch list. Otherwise, for this pair, we were trading Euro JPY, and we have done 2 major backtestings on Euro JPY, and I think Euro JPY has nice price delivery. Per week, you cannot get less than 5 high probability trades. So you could consider adding Euro JPY if you're part of our school. So Hubidi Prof signing out. See you in the next video.